11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, 4th day of February 2014. And this is the daily report for gold and silver. Following a moderately strong rally yesterday, we do have gold trading off slightly today. It's well off of the lows, but it's still trading off about $2 to $2.50 on the day. 1246.80 is the low. The high on the day is 1262. Silver possibly benefiting from the fact that we do have a firmer equities markets after that 300 plus drop yesterday, up about 60 points today. We are back at 1950, just below 1950, 1948. You can see that. And you know that the key numbers we're looking at in terms of our current resistance in silver is 1958. More about that towards the end of the show. Traders, as we spoke about yesterday, for the first time in a very, very long time, I heard the words safe haven and gold in the same sentence. It was being described as a return to a safe haven investment, that especially when we saw a decline of roughly 300 plus points in the equities, U.S. equities markets yesterday. Now, today, we have a firming globally of the equities markets. A lot of people are attributing that to bargain hunting. And according to one analyst, they actually said the safe haven demand seems to be waning. That's a very, very short period of safe haven demand, I have to say that. Another interesting piece of news, of course, is that Yellen, the new Fed at the helm, so to speak, said that the lower equities markets yesterday will not derail any kind of tapering that they have planned. Realize they've tapered for the second time. They've cut 10 billion, then 10 billion. But from 85, they're still purchasing 65 billion in hardcore assets each and every month. So to me, that's fairly sizable. As we look at the market, we're looking at a 720-minute chart. And the characteristics are still in play for a bullish rally. In other words, aside from this one candle right in here, we've seen this market basically rally, correct, rally, correct, rally, correct, and so on. And what we have had, if we look at this marketplace in its most simplistic format, and what I mean by that is we're simply looking to see if we get a series of higher highs here. We had an equal top, but we did exceed it right in this particular top. In terms of the lows, when we look at the lows themselves, we are getting a succession of higher lows. So we're still maintaining an upward track, even though the market's down a couple of dollars today. When we look at it in terms of this frame of reference, there's no doubt. I still think that we've got the rally in play, and it's a matter of positioning ourselves properly in the market. Now, some of my thoughts on that are as follows. In terms of an area that you might want to look, if we can see this market dip back to around the 1245 area, and you can see it touched upon that today when you look at this low here, but that would be a good entry point. The whole idea behind this is if this market's going to continue to rally, we should get a series of higher lows, and that's at the point that we probably want to position ourselves as that market takes that dip before moving back up. I still am bullish on this market because I still believe a couple of things. First of all, I believe that we did receive our double bottom, but more importantly, it is the model, the two different models that we're looking at, one with the standard correction, the other with what's called a fifth wave bear market truncation. And that seems to be, without a doubt, the pattern that is emerging, that is unfolding. Let's go ahead and pull that up and we'll talk about it. So in terms of a bear market truncation, that particular pattern type in the model that we're looking at is probably the most likely model that we're looking at. We can go back. This is when this gold hit its record top above 1900, 1920. We get a series of ABC corrective bull market waves. However, what we do get is we then go back into our impulse wave, and that impulse wave fails. We get our double top here at 1800, and that's really where the bear market count starts. So we get wave 1, wave 2, a long wave 3, we've gotten our wave 4, everything's lined up, and then we go into this fifth concluding wave, which appears to be truncated at this point. We had a 1, we had our 2 count. This is our 3rd count. On our 3rd count, we got our double bottom, 1186 and 1181. Those were the 2 bottoms. If in fact that model, this current model that we're talking about is what's unfolding, here's what we can look at this point. What that tells us is that we have concluded this 5 count down and are now probably headed into some sort of an ABC corrective pattern. However, an ABC corrective pattern within a bear market count would have our A and our B waves to be counter trend waves. In other words, those would be waves in which we would experience higher pricing in gold in a rally. So we would get our A, something of a B, and then our final C. With that in mind, that being said, of course, where are these different areas that we're going to look at for the market to possibly track to? And that's what we're really going to be discussing probably through the month of February, because this is what I believe is unfolding. I think that we have probably concluded our 5th wave. We are probably going into some sort of an ABC correction. And if that's the case, this is of course, a much more minor ABC here, because this is wave 4 broken up into an ABC. And then we have our 1, 2, 3, it truncates and we move back into a counter trend ABC, which would be in terms of time parameters and price moves more similar to this, because we've got our intermediate count 2, 3, 4, 5. This would be our long A. A will probably be composed of a 3 to a 5 count. We'll have to see how that unfolds, but that's my most current thinking in terms of where I think this market in fact might go. Now, that brings us to our long count. And on our long count, of course, we're simply looking at all of our intermediate moves. We just got done talking about them. And in terms of our count, we're looking at 1, 2, there's 3, 4, truncated 5th, concludes. Now, another thing is that when we look at the weekly chart, this, of course, is in Japanese average format. Again, we have kind of crossed that threshold line, but at the same time, we don't have a clear and real definitive breakout, because we're now closing back below that on our weekly. On our daily, just because of the tactor of the angle, it is a little bit above that line. And again, these trend lines can be adjusted. They're subjective, and so we've got to give it some tremendous grains of salt, maybe the size of a building. But with that in mind, of course, when we take a look at this most current week, we had pretty much the beginning of 2014. That's right here. This is our bottom. And that, of course, is our double bottom. If you look at the candlesticks themselves, they're a decent size. You have lower and upper tails on all these candles going up. So it's not a real definitive strong trend. If it was like this downtrend here or even this uptrend here, see how you lose these lower wicks and upper wicks on the downside. You can see when these wicks start to return, it's weakening, and then you get your pivotal doji. So now that we've got this pivotal doji again, although I'm bullish in the market, I wouldn't be surprised to see it backfill a little bit and then continue on its rally mode. And this is the real point that we'll really have to see, not only a breakout, but a definitive move above this long-standing resistance. We have been flirting with this resistance line above and below it now for the last 2 weeks. Now, whether it's building a base or whether this once again will be that absolute resistance that it clearly looked like it was not as it broke through, we'll have to see, because we are so close to this particular line that in terms of a technical basis, we really could see it back off, backfill, and then shoot up. That's what I'm looking for, or simply move back lower. That would change everything, because that would mean that rather than a truncated 4th or a truncated 5th, as this market came up, that was our final 4 count, and we have another 5 count down. It's not truncated anymore. So as I said, we'll have to see how that unfolds. But in terms of our strategy right now, I do believe that if we get some sizable pullback here, it's to be expected, and then we get the signs that it is rallying again. And we do that, of course, by looking at certain formations, such as this pivotal point like we're getting here with the dojis. We would look, in essence, to see this. market moves to here, it backs off a little bit, and right at that point, it could be anywhere between 23 to 50% of a retracement of this move. We get, again, this pivotal doji like this. We get that signal. That's going to tell us that we're going to probably take a stab again to cross this resistance area, and that's the point that we would position ourselves in the market. Now, when we take a look at silver, and I haven't been all that bullish in silver, it is up today. That in the same time as we have gold trading lower, but I still believe that the market has been defined in terms of a pretty strong range in which we have these highs at around $20.50, lows at around $19. The only real bullish sign that we've gotten when we look at the daily is we are getting that pivotal candle. If you look, you can see that that's gone green and small. We'll have to see if we could follow through something like we got here or like here. If we do, there's actually a play in the market because we could see silver move from, if it breaks above, call it 1958, because that's a pretty key point to me. 1958, you could see we could get a dollar move and still fall within the confines of this range, and it would still be a nice profitable trade. We'll look at that in the days to come as we are now at the beginning of February. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another daily update and review. And more importantly, please join us for our live webinar. And that live webinar will be pushed at 4:30 Eastern Standard Time. We have links all over the site. Also, the email has had links. Love to see you there, and we can answer any questions you have directly. Again, Gary Wagner. Have a great day. Bye-bye.